Welcome our first guest then. Taher Badshah joins in from Motilal Oswal AMC. Tahir, hi, good morning. What's your take on the market? Do you think it's a bit of an overreaction to the global situation, or do you think the market was maybe overextended and needed this correction?
I think it's a bit of an overreaction, given that our situation probably will be a little better compared to some of the other emerging market currencies, especially the LATAM currencies. It's also manifests itself in the way the rupee has been behaving today, and so to that extent, I think we perhaps might be a little better off. But it's a clear risk-off day, and therefore everything is getting sold off in terms of risk. And to that extent, even India is participating. It's also seen in the form of the mid-cap disaster. So we have the mid-cap index down nearly 2% compared to the Nifty, which is down about 1.5%. So I think it's clearly a risk-off day, but I think probably to some degree it's a little unwarranted, given that we've done a bit of work in terms of ensuring that we don't have a further problem with regard to the currency in the recent past, and also the fact that we probably are seeing a slightly better forecast as far as the political situation goes, and maybe that is something which should inspire the markets going forward.
Okay. Taher, what are you making of maybe the banking numbers? And the reason I ask is that ICICI Bank and SBI is still to release numbers along with PNB, but ICICI Bank this week. How would you play ICICI Bank ahead of its numbers?
So we right now are not positioned in ICICI Bank, but clearly, I mean, these will be important numbers, especially from the banking side, to look forward to. State Bank is still some time away, but ICICI Bank is something which will be important. But I think more than their own numbers, I think what will probably dominate their stock performance in the near future is going to be the outcome of the policy meetings here as well as abroad over the next couple of days. I'm quite probably positive that we may not see any increase in rates. Perhaps if not a decline or a cut in rates, we may see some indication towards a possible softening. Of course, the situation will now also have to take into account the recent currency devaluations which have happened across some of the emerging markets. That becomes an additional challenge. But I think otherwise, the RBI probably, in my mind, should look for a slightly softer stand and give growth a chance. So to that extent, the banking stocks, including ICICI Bank and some of the others, should do well, notwithstanding the numbers. But clearly there's also an expectation of better numbers out of ICICI Bank.
Tahir, so how should one position the portfolio now? Because again, this year, the first month has been about IT. That's the only sector which has done well. Do you think it's back to that trade where you only play the export-oriented companies and take a backseat for the cyclicals and the domestic stories, or do you think that could change sometime?
For now, I think IT clearly will stand out, and also given the kind of enthusiasm which is there with respect to the US economy, and also the IT sector in general, plus the results which have been announced by many of the larger companies in IT. So IT clearly will remain a preferred trade. Along the way, we are still looking for good visibility of growth in the next year as well, in FY15, even with a flattish currency outlook. In addition to which, I think the similar principle will probably hold across other sectors as well. Wherever we see growth and reasonable growth at that, I think there will be opportunities and options. There could be individual stocks within sectors as well. And now I think in the recent correction, it's becoming a little neutral between large caps and mid caps. So we've seen quite a lot of large caps also correct quite significantly, and they could provide important opportunities wherever we see enough visibility of growth, such as ITC, HDFC Bank. Those are the ones which have actually come up with pretty good numbers. Some of the mid-cap stocks also, we believe wherever we have seen growth will come back. I think telecom is a sector which has underperformed the market for a while, and if we see good numbers out of both Idea, which is lined up today, and Bharti over the next couple of days, I think that is a sector which can come back in favor. We're looking forward to good numbers from Idea as on a consensus basis. So those could be some of the opportunities which could be looked to in the market.
What about cement? Is that something that you'd be watching closely in terms of earnings? And the reason I ask is Ambuja Cement has been quite weak of late. Earnings come out in the first week of Feb.
Yeah, the initial indications out of some of the large cement companies, we saw Ultratech come out with these results, and those were not too inspiring, although on beaten down expectations, of course, slightly better than the previous quarter, but nothing significantly different to write home about. So I think a profitability weakness for some of the cement companies will still continue. We are still seeing very mixed signals as far as pricing trends go. They are not able to sustain in short periods of time, and that's something which is probably going to tell on the profitability. Volumes are of course quite stagnant too, so I don't really see plus many of these do trade at reasonably expensive valuations as well, especially some of the large cap stocks in cement. So I think probably I don't foresee any great action in the cement space in the near future.
Taher, before I ask you the next question, any disclosures you want to make on any of the stocks that you have spoken so far?
I think some of these names are part of our existing portfolio, so nothing as such at this time.
Fair enough. My next question is, regarding auto names, how would you trade them? You've seen Maruti today react to the yen appreciation, down about 4% today. Of course, Tata Motors, the tragic event, the stock is down 5%. But in general, we have seen some bit of underperformance from some of these names. How would you approach them now?
So I think some of the more leveraged names, especially those two currencies, are actually coming down. Maruti, of course, as you mentioned, is one. Tata Motors, I think, is also, apart from the tragic event, it is also led by the Chinese weakness, and that's a near-term worry for the market as a whole, given the kind of spike in corporate yields that we have seen in China in the recent times, which probably are indicative towards some kind of a possibility of a growth slowdown in China. And JLR clearly is leveraged to China in a big way, so that's also reflecting on the stock to my mind today. And I think those names will therefore probably be subject to the volatility in the currencies, though the USD INR might remain stable, but the emerging market currency related impact perhaps will show up on these stocks. I think probably the trade might become a little skewed towards some of the two-wheeler names in the near term, where probably there might be a relatively more safety and maybe slightly better growth outlook on the back of rural demand broadly. But from a more longer term perspective, I think we still like Maruti. We own the stock. We also like it.
Thank you so much, Taher, for your time.